What's going on, YouTube? Today we're going to talk about assets. What asset helped me become a millionaire? Now, everyone buys different assets to help grow their wealth. So I'm going to just tell you what I bought that helped me become a millionaire. Now, before we get into this video, I'm not a financial expert. I just spend an ungodly amount of time studying about the market, research, and everything else like that. So I want to make this video to help you understand which assets that helped me become a millionaire. Now, before I say that, I'm going to list it from least risky to risky and explain why I bought each one. So let's get into this video. The first asset that I bought was, guess what? Stocks and bonds. And that went into my 401k account. And that's the first thing I did to start building my wealth over time. I took advantage of the employee match and built up my stock portfolio. Now, I do have different stock portfolio, like my 401k, my dividend portfolio, that achieves different things. So that's the very first thing I did to start building my wealth. Now, number two thing that I bought to help build my wealth is to buy real estate. Yes, I bought real estate. Now, there is a bunch of cons to real estate, but let's talk about the pros of real estate. Real estate, someone else pays your property off. And over time, the appreciation of the property and that payment will help you build wealth. Now, the con of it is that people don't talk about is if your renter doesn't pay, if there's an AC that goes out, if there's something that happened to the property and it's not as passive as some people say it is. So at the end of the day, I put it at number two because it requires more work than a normal buying of stocks and bonds and dividend stocks. So there is pros and cons, but it did help me build my wealth. Number three that helped me build my wealth, and the reason why it's number three, is a business. Now, if you didn't know, the business assets combine with your net worth. So if your business is in the positive, for example, has $1 million of hard asset in the portfolio or in that company, well, if you're the person that owns the company 100%, then guess what? That $1 million adds to your net worth. So, for example, I currently have an eBay business. Now, according to what I have listed and everything else like that, it has about $400,000 worth of assets in it. So that will carry over to my net worth. So this helps me build my net worth over time by me selling the product and making money. The con is it takes a lot of work, but it is an asset that helped me build my wealth by paying myself money, building assets in the business, and helping with my taxes. And you know the con is if you go in a negative in your business or you don't know how to run a business, you put yourself in worse financial situation. So that's the con. And those are three assets that was my main driving force of my building wealth. So let's go into stuff that are a little more risky. And number four is gold, silver, and jewelry. Okay, jewelry value will depreciate, and the only real value is the weight of gold is in it. So if you have an 18 karat gold necklace, guess what? It's only worth the weight of the current market value of the gold. So if you buy a $20,000 chain and it only has $10,000 worth of gold, guess what? You only have a $10,000 worth of gold. So at the end of the day, jewelry is good to have, but it also has a downside if you buy it overpriced because of the design or XYZ. Now for me, I have gold bullion, gold. I I have gold bullion, silver bullion, and I have loose stones. And over time, that increased in value. How did I get it? I pretty much e-waste it. I got some as a gift, and I just been building up stock over time. Now, the loose stones I bought when I was in the Middle East, I got a great deal for them, and I just held on to them. I bought them about, you know, 15, 20 years ago, and the value went up on sapphires, emeralds, and diamonds. So I got some loose stones, and they're a lot more riskier to have these type of items because I give you an example. If you go to a jewelry store, a pawn shop, or somewhere that takes gold, silver, or loose stones, guess what you're gonna be making? 95, 80% of the current market value. So guess what? You're not getting the 100% value on that gold, silver, or even diamonds because of that. So understand that when you buy these type of items, you have to wait until the bar goes up 115%, 120% to make your money. So that's the downside of it. And that's why I put it as a more riskier investment because you don't know what the market is going to do. It might take you 5 years to get your money back. It might take you 1 month to get your money back. But at the end of the day, it does go up over time. So that's why it's at number 4. Number 5 is something a lot more risky. And it's paper collection. What do I mean by paper collection? Pokemon card, art, wine, and Magic the Gathering, trading cards pretty much, NFT. These are items that are super risky. Some are more risky than other, depending on what people want at the time. Yes, Pokemon cards has been skyrocketing in value, and I do own Pokemon cards. I do own Magic cards, and I have about $300,000 worth of inventory. Now, let's talk about the downside. The market for Pokemon card and Magic the Gathering card or trading cards are very easy to control. And here's the example. If Logan Paul go online and buy all the Pikachu cards worldwide, he controls the market for those Pikachu cards. Will he do that? No. But could he do it? Yeah. And then he could sell every single Pikachu card for $10,000, $20,000, $30,000 to people who really want those cards because he owns majority of the market. It's all based on supply and demand. And that's what's the issue with these trading cards. If anyone that want to make real good money on it, like Kabuto King, he bought a bunch of them and he bought it for 50 cents a dollar. Now they're selling, I guess, about $13 a card, and he just owns a buttload of them. I think he owns something like 45, 55% of the market for it, and he caused the price to go up. And that's the issue with that one. And the last one I want to talk about is cryptocurrency. Do I own cryptocurrency? Yes. Do I own a lot of it? No. The reason why is the fees. I don't think cryptocurrency is a scam. Well, most of it is a scam, but I don't think the big two are a scam like Bitcoin and Ethereum. But here's the issue with it. The fees. To use crypto, it costs money. To buy crypto, it costs money. And at the end of the day, it's a really risky investment because we have no idea who controls what for cryptocurrency. We don't know how it's going to do. We don't know how the market is really going to go up or down with it because it's all based on supply and demand. And, the issue that I have is it costs you 10% to buy dang cryptocurrency. Then if you transfer it to a crypto wallet, it costs you another fee. Then if you want to use it or transfer it back to yourself and get cash, you hit fees. So that's the issue I have with it. It's all the fees that goes around with it. Like it can go up 50, 60%, but you probably lose 10, 20% in just fees on getting the money. So that's why I say it's risky. You can't control it, and it costs so much money to even use crypto. And that's all I got for you. Those are the assets that made me rich. Now, hopefully, this helps you have a better understanding. It's not a typical one that says, hey, you need good health, you need to make income producing. No, those are the things that made me wealthy over time. I bought stocks over time, I bought gold over time, I bought real estate over time. And over time, I built a portfolio on each one of them that helped me build my net worth past $1 million. Like and subscribe to my video. That's all I got for you.